Hi, good afternoon. My name is Eric Levinson, Head of Business Development, and thank you for joining us. Today is March 1st, so we've gone through the first 2 months of 2022. Already been a very exciting year. We're joined today with Andy Ho, Investment Officer of VinaCapital and Lead Portfolio Manager of our Vietnam Opportunity Fund, VOF, and Con Vu, Portfolio Manager for VOF. And so what we're going to do here today is a combination of a couple things. We'll certainly take a look back at 2021, talk about performance, talk about attribution, kind of how we got here to where we are today, and importantly, we'll talk about where we are. What's our current positioning? What does our pipeline look like? And then after we have a little bit of a conversation here, we'll invite Michael Kokolari up, our Chief Economist, and then we'll talk more about the economy in Vietnam. Obviously, we'll talk about what's going on with Russia and Ukraine, and we'll see how that impacts the Vietnam investment landscape overall. So with that as an agenda, Con Vu or KV, let's talk about performance. So the first question that people always want to know is, how did you do? So what did 2021 look like?
Good afternoon, Eric. As the saying goes, may you live in interesting times. It's certainly been a very interesting 12 months. As Vietnam looks to come out of this recovery post-pandemic, the market performed very well. The index was up 37%. The economy did well. GDP grew 2.6% for 2021. And likewise, the portfolio did well. The VOF's NAV grew 37% in total return terms for the calendar year. And the share price, underperformed a bit disappointing at 22%.
And so as you think about that up 37%, what are the key metrics, what are the key companies that drove that performance?
Yeah, it's been, as I said, it's been an interesting 12 months. What we've seen is there are two sectors that have really much driven performance in the market last year. Financial services, which sort of dominated the first part of the calendar year, and then the second part of the year, they suffered a bit of a decline. And real estate flipped around. They had a slow start to the first half of the year and increased in the second half. That sort of reflected in our portfolio as well. Today, we have about 26% of the portfolio in real estate and about 23% in financial services. And over the year, we saw those two sectors drive that performance.
Interesting. So, if I had to think about the portfolio, one of the questions that we would get each quarter, and as we did calls intra-quarter with clients, they'd always say, what's your weight in Hoa Phat? And so you didn't mention Hoa Phat yet. Hoa Phat had gotten up as much as maybe 21, 22% of the portfolio. So obviously that must have been a contributor in a positive way as well.
Right, so the key driver actually to performance last year was Hoa Phat. Hoa Phat, as investors have been following this fund over the years, has been our largest holding in the portfolio. And quite rightly, there were periods early last year, where it did go over 20%. Today, Hoa Phat represents about 13% of the portfolio. But during the calendar last year, Hoa Phat was the biggest contributor to that 37% performance. Importantly, though, the company is still trading at a very reasonable valuation, about 6 times forward PE. And if you compare that to the Vietnam index, which is about 14 times, the company also delivered fantastic growth last year. It grew something like 175%. Net profit growth, and actually, if I recall, the second company only in Vietnam's history to achieve over $1 billion in profit. So still a very good company, but I think it's important to remain disciplined investors. And what we've done over the year, particularly in calendar year 2021, was that we trimmed the portfolio into that strength. And over the year, we divested about 100 million in Hoa Phat, and we used the proceeds from that investment into new investments, which we'll talk about later.
So, it's a good segue. So as we think about the portfolio, for those of you who may not be as familiar with the Vietnam Opportunity Fund, it's a combination of private equity and public equity. And so one of the questions we frequently get is kind of, what is the breakdown of public-private, and how's the performance been of public versus private in 2021, particularly when the public equity markets really ran?
Right, it's very much the same within the VOF portfolio. The portfolio, in terms of asset allocations, remained quite consistent over the years. It's about 80% in the public equities and about 20% in private and privately negotiated opportunities. If you look at the public portfolio, actually, last year it increased over 50%. So the private equity portfolio, naturally, as with many businesses on the ground here, again, we said earlier, it's been a challenging year, a year where we've seen a lot of consolidation and really a period where the strong businesses, the resilient ones, are looked to set for the recovery. And I think that's just something that Andy will cover off later when we talk about some of the opportunities we're looking at. Within the private portfolio, I think it's useful to highlight something quite interesting happening last year, and it's a reflection of our strategy. One of our largest private equity holdings, Untitled Woodworking, which is the #1 cabinetry and laminate manufacturer in Vietnam. They have something like 60% of market share. We invested into this as a private company in 2016. In August 2021, the company listed. Today it's listed on Upcom, and it's seeking a path to list onto the main bourses. Over that period of investment, we've done the things that typical private equity investors we do. We've sat on the board, we've helped management grow. If you look at the return on An Giang today, the IRR is about 23%. But in terms of the multiple of the amount of money we've invested in, we've managed to deliver about 3.5 times. So, An Giang is an example of looking at businesses and opportunities when they're private, working with them, growing with them, and then helping them go through the listing process.
Well, and that's a great point because, we talk about the exposure of private equity and public equity, and it isn't black and white. No. Hoa Phat was a private investment, I think, 14 years ago. An Giang, maybe 5 or 6 years ago. And so as people look at the portfolio and see listed companies, in fact, most of them were actually invested when they were private. And the great part about the portfolio is we're not forced to sell. Hoa Phat, which was, a top performer last year, because of the way we created the portfolio, we were not forced to sell. And in an environment last year when public equities actually outperformed private equities, that was very beneficial for shareholders. So in terms of portfolio positioning, what does it look like today by sector, by theme, by industry? How are you thinking about, where we are today?
Yeah, as I mentioned earlier, today the two largest sectors in the portfolio are real estate and financials. If you looked at this picture 12 months ago, it would have been construction materials. So, what have we done in the past year? Well, we've put about $100+ million to money to work. And specifically, we've invested into the real estate sector as well as into the consumer sector. And also in 2020 and in early 2021, we also invested into put more money to work in the financial sector. So today, if you look at where that portfolio is, over 50% are in these two sectors which really are set for growth. If you've been listening to our colleagues, Mike and Ismail talk, 2022, that sort of their two key sectors that they're focusing on, where they believe that will deliver very strong earnings growth, will be financials and real estate. So in terms of positioning, we think that where the portfolio sits today is about right. Some of the opportunities that we've been looking at, and Andy again will talk about those, have also been into these sectors.
Well, thank you, KV. Appreciate that. So Andy, as the CIO and lead PM, we talked about performance, we talked about positioning. What do you think about the performance, and then how does that take you as you think about what's going to happen in 2022?
Thanks, Eric. I think we've done well in 2021, but really we need to look forward, how to position the portfolio going forward. I am happy to say that on a rolling calendar basis to the end of February, just the listed component alone in our VOF portfolio, we've delivered over 58% return. Comparatively, the VN Index delivers slightly over 44% return. Again, we're not stock pickers. We invest in businesses, and we'll talk more about how we do so later. But it shows that the quality of just the listed component of our portfolio is still quite high and still growing.
Andy, thanks for that perspective. And I think it is important because even though we focus on private equity, it doesn't mean we can't be great at listed equities as well. So, okay, we're focused on 2022. What does the pipeline look like today?
I think it's important to reiterate that VOF as a fund, our strategy is to primarily look at businesses before they go public. In other words, we try to make investments, meaningful amounts, anywhere between $30 to $50 million into these businesses when they're private. There are certain cases where the companies may be public or listed, but we're able to negotiate terms and take a large positions of these publicly listed company. And I would call that like a privately negotiate investments into these public companies. So as we look in the pipeline for 2022, clearly we're living, we're in a world where we have to live with COVID. And I think we've been very fortunate to be able to track a lot of the businesses that we had an opportunity to invest in over the last 1 to 2 years, but because of COVID, we were a bit shy in watching how they develop and how management navigates themselves through the difficult time. And now I think they're ripe for investments. The areas that I really like now going forward are industrial processing zone, for example. We do continue to see a lot of businesses from China, from the US, from Europe, migrating some of their manufacturing activities to Vietnam. This will require them to either lease or purchase industrial processing land areas that they can put their factories in for the next 5 to 10 years. So this is an exciting area. As we recover from COVID, also we're noticing a lot of consumer spending. People are spending the money, but more so on services rather than goods, because they've always been able to buy goods during COVID. They can buy a TV, they can buy a computer, they can buy an iPad, and it was delivered to their home. So what we're seeing now is, as we recover from the restrictive movements and the social restrictions, people are spending money more on services, which means they're going to spend money on wedding centers. They're going to spend money on parties. They're going to restaurants, hotels. They're going to spend more money in resorts for short vacations. And so we like that space. But we're still very careful. Don't get me wrong. This is an area where the capital investment is quite high. And we have to look at the cash flow in this area as well.
So let me go back to that first point. You talked about industrial processing. I think when I've thought about that, I've always called them correctly or incorrectly industrial parks. Is that the same?
Yes, it is. Well, in Vietnam, there are a few types. Industrial park is a generic word for it. Industrial processing zone, they tend to focus more on manufacturing. Industrial park can also include areas that they don't necessarily have to have manufacturing as well. And then there's also economic zone, industrial, which provides more attractive terms for tenants to be invested.
And so the reason I wanted that clarification, not only for me, but also for the audience, is when you think of that, is that a play on real estate or is it a play on manufacturing and FDI exports? So what are the drivers for that?
Yeah, that's a good question. There's arguments for both sides, whether it's a real estate play or is a manufacturing or industrial play. I tend to think about it more on an industrial and manufacturing play simply because we are not able to sell the land. We're not really owning the land. We invest in a business. The business has a land use right from the government for about 50 to 70 years. They then develop the infrastructure, water, gutter, sewage, electricity into the area, and then they carve it up into smaller parcel and they lease it to foreign direct investors such as Samsung, LG, Intel, etc. So the foreign businesses, they themselves rent the land from the industrial processing zone, who then rents the land from the government. So there's no opportunity, or less opportunity, if you will, for capital appreciation through the sales of the land. It's more of developing the land and earning a steady cash flow through the rental of the property. But the demand is quite high, so you can get a pretty healthy cash flow if the project finance is done correctly in each of these projects.
Excellent. Well, thank you for that detailed explanation. No, it's important. So, one of the things that we've been talking about, and I've certainly been reading about, is this kind of digitalization trend. And the question that I want to ask you is this a kind of post-COVID bump? And so a lot of people talking about the banks that have executed successfully have been digitalizing everything. Other businesses, deliveries. As kind of life gets back to normal, is that trend a short-term trend? Is it more of an evolution in the economy in Vietnam? And things that have historically been too small, you talk about deal flow, average trade of maybe 35 million. Most fintechs are kind of $1 million or $2 million, and even though there's a couple unicorns in Vietnam, the investments have been quite small. Do you think your pipeline in 2022 or next year will kind of include more of these themes as well?
Sure. I think you touched upon two big areas in this discussion or question. One is is the use of technology going to continue as the short term? I really think it's going to be a long term. It's here. It's here. It's within. It's part of our life. It's part of our older generation's life as well. I think what happened before COVID was the banks had technology. Uber, Grab, the delivery businesses, they were there. I think over the last 18 to 24 months, people began to get used to it. It was more demand driven. So you're at home, you want to get products and goods delivered, you begin to get used to working with your iPhone or your Samsung phone to figure out the app to buy things and have it deliver. And then you have to figure out, well, how am I going to pay for it? Am I going to use my credit card? Am I going to use an e-wallet? Am I going to use crypto to pay for it? These are things that people, everyday people, even my grandmother for that matter, has to figure it out. Yeah. And the funny thing is, once they figure it out and it becomes part of their life, they find it quite efficient. Yeah. Or quite, and why should I go to the grocery stores anymore? So what we're thinking now is that as time goes by, the gross margins once used to belong to the brands that produce the goods, then started to shift over to the grocery stores, the folks that invested heavily on a lot of areas, convenience stores, a lot of shops for people to go to buy the goods. So the gross margins started to shift to them. And now with people using more and more of the logistics available, you can actually buy directly from the manufacturer. So then what happens is more gross margins being shifted away from the manufacturer and the grocery stores as well. And the beneficiary for this whole thing is the consumer. The end consumer is benefiting. So the question really is, well, are those delivery services, the IT companies, are they making money?
Yeah.
Right? They're certainly making life for the consumer much easier, for you and I, much easier, for businesses much easier. But the key is, are they making money? And I'm genuinely having trouble looking at the profit line for these businesses. I do see a lot of revenue growth. I do see a lot of cash flow movements, whether it's been fundraising, debt raising, and they do have generating positive cash flow in some certain circumstances. But I have to admit, it's fairly difficult for me to see how they make a profit on a sustainable basis. So we are not aggressively pursuing this space yet. We are keeping a very close eye on it, and we hope these businesses do make money, and we hope they continue to grow because clearly the consumers benefit.
Yeah, and you know, interesting. I think it's always important to, in two things, which is to be a disciplined investor and not get seduced by the theme that's very attractive. You know, within VinaCapital, we do have a venture capital portfolio who has invested in fintech, but at a much smaller scale, and those have been very, very successful investments for us. So, you know, within the ecosystem. We're very well connected, and I'm sure that the deal flow that you see is fantastic. So the fact if you don't see something, it's not that we're not aware of it, but we're actually doing the due diligence to say, this doesn't today meet the way that we invest.
Yeah, I used to run the venture capital investments at Dell Computers in the US and help launch a couple of our funds here. And the difference between venture investment and private equity or listed investment is really when you look at these venture investments, you don't necessarily have to take them to a positive cash flow or profitability because in a lot of circumstances they get bought out by trade buyers because trade buyers want access to technology, people, engineers, distribution rights, what have you. And a lot of times the venture investors and the entrepreneurs want to focus on one or two of these key points, but not necessarily driving the business to profitability. Yeah.
And you're looking for, one of the things that we've talked about is every time you make a purchase, you're actually already looking at an exit, which is actually a very different way to approach an investment.
Yes.
All right, terrific. All right, so, in terms of your pipeline, is there anything specific that you can or cannot talk about? Let's say the things you can talk about in terms of sectors that, as you look at quarter or two out, will likely make its way into the portfolio.
Yeah, we tend to shy away from speaking about the specifics of what's in our pipeline. But like Khan mentioned earlier, we do have quite a bit of exposure to the financials, the real estate, and the material space. So needless to say, we are probably not going to spend too much time putting more investments into this particular sector. Okay. We are going to develop more in healthcare. But the irony of the healthcare is that we have 3 healthcare platforms in our portfolio. All 3 of them have interested trade buyers. So we're in a situation where do we put more money into these businesses and continue to grow them, or we look at the terms which are presented to us to exit these businesses. And I think we have to do both. We have a fiduciary duty to make sure that all terms, we review all terms, and our investment committee will look at them and look at the potential growth versus the valuations being presented to us. So it's quite unique. But like I said, we like healthcare. We want to continue to grow this. But if other folks, other investors, strategic like them more than us and willing to pay for it, we're happy to exit these assets, right? And rebuild. We've proven that we can rebuild our healthcare platforms over time, and we'll continue to do that. Other areas I like is the consumer. But the consumer, we have to be very discriminate about that. Not all consumer players will do well. And in fact, I feel that a lot of consumer players will be spending a lot of money brand building, marketing, and finding it hard to be successful. But there are certain types of consumer businesses that are able to capture the customers very naturally. Or monopolize the customers naturally for whatever ecosystem they exist in, they're able to do so, and that's what we like.
Yeah, and it is interesting. One of the things that we've spoken about in the past is there aren't, let's say there's some, but there are not that many Vietnamese consumer brands. People still buy, whether it's Adidas or Nike or Louis Vuitton or what have you. And so as we think about that homegrown brand, these aren't guarantees. And so it's more prudent to invest in things that are less kind of finicky and trendy. So, well, thank you so much for your comments. With that, we're going to invite Michael Kokolari up. We're going to talk a bit about the macro, a bit about the controversies going on in the world, and then we'll open up for Q&A with everybody. And so just give us a minute while we grab a fourth stool. Thank you. All right, and so now we're joined by Michael Kokolari, our chief economist. And as questions are coming in, Michael, no surprise, the first question is for you, as we said it would be, about Ukraine and Russia. So Michael, obviously there's been a lot of talk about this, a lot of things written, so as we've now had kind of a week to digest, what do you think the impact is of the Russian invasion in Vietnam?
Well, the direct impact on Vietnam is actually fairly minimal. Of course, there'll be less Russian tourists to arrive after everything settles down with COVID, but the Russian tourists made up less than 5% of overall tourist arrivals. Direct trade between Vietnam and Russia is not that substantial, maybe a billion plus, something like that. Russia and Ukraine together around two and a bit billion. The only thing really notable is that about 10% of Vietnam's coal imports come from Russia, so there might be a bit of impact there. So the direct impact will be fairly minimal. Now, that having been said, with oil prices, looking like they'll probably stay at around $100 now for the for the rest of the year, probably. That would probably add something like half a percentage point to the inflation rate here. So let's say that means that inflation in Vietnam will get up to, I think we'll probably peak at a bit over 4% year on year around April, May, if you look at the base effects. Right now, inflation is about 1%, and then we'll probably average about 3.5% for the year. About 0.5% more than it would have been had we not had this spike up in oil prices. So it's not nothing, but it's not a major impact. Now,
let's pick up on that. So, as you think about inflation, is there a certain number where you say 5%, 8%? Is there a certain number where you say that is a risk to derailing domestic consumption or any foreign investments? Is there an inflation number that makes you kind of get concerned?
Yeah, obviously at some sufficiently high number, the government will have to do something. Right now, policy interest rates are 4%. So, I just mentioned that inflation right now is just a bit over 1%. So inflation would really need to go up a lot before it became a serious concern. But yeah, if I had to pick a number, probably if it stayed at 4.5% or so for a number of months, yeah.
All right. So just the audience, you can see me, I'm looking down. I've got an iPad in front of me. So if you have any questions, just put them in the chat function, and then I'll pick them up. So a couple questions just came in. I'll actually give it to the audience. It's probably a little bit for Andy and Michael here. What is the exposure of Vietnam in the portfolio to a potential slowdown in China's growth? Well, let's go to Vietnam first for Michael, and the portfolio to Andy.
Yeah. This is a question that comes up fairly regularly, you know, every time there's all the way back to 2015. And counterintuitively, surprisingly, it's a modest benefit for Vietnam because we run about a fairly large trade deficit with China, about let's say about 12, 13% of GDP. So if you imagine that when China is weaker, it kind of means that all these inputs that we buy here that we then use as manufacturing inputs, the price of those essentially goes on sale. We have some exports to China, obviously that's things like commodities, pangasius, dragon fruit, things of this nature. But we have we buy a lot more from them than we sell to them. So it actually would be probably a small net positive in terms of the economy. Might be some impact on stock market sentiment, but in terms of the economy, yeah.
I think from the investment perspective, we have to look at a few things. One, are businesses truly benefiting from the tourism from China? And if there's a slowdown, will they spend less dollars in Vietnam? So that's an area for us to have a look at. But I don't see a significant change on that front. In terms of buying a lot of goods, as Mike mentioned, a lot of it gets processed in Vietnam and then re-exported. Vietnam doesn't consume a whole lot from China. We have some low-end technology products like cell phones. But by and large, Vietnam is quite self-sufficient in terms of food and foodstuff. In terms of technology, we do produce quite a bit here in Vietnam. So I don't think from a products perspective it's going to have a whole lot of an impact. And as a result, in general, I don't see a huge impact on the businesses that we invest in.
All right. So Andy, let me stick with you. You know, real estate is a topic. Obviously, KB talked about kind of the portfolio owning real estate. What are your thoughts on the real estate market in Vietnam? And as you think about it, do you think about it both kind of as an institutional investor, as a portfolio manager? Do you think about it as a retail investor? How do you, approach the real estate market here?
I think the real estate market makes up a very, very large component of GDP and GDP growth for that matter. And as some of you may know, Asian folks, they love real estate. And unfortunately, when times are a bit volatile in terms of interest rates and currencies and all that stuff, the default asset tends to be real estate. So over the last 12, 24, 36 months, real estate valuations have come up quite a bit in Vietnam. Whether you buy land or you buy units that are produced by the developers, they've all gone up. And we've, as a portfolio, VOF has benefited tremendously from that, whether we invest in the real estate developer or Hoa Phat, the steel company, which produces the material for the real estate development. Or Ancon as well. That's very good. But going forward, we have to look at it from a point of view that perhaps it'll temper out a little bit, and perhaps a little bit, the purchasers of real estate is going to take time to digest and see how rental rates come through, see what sort of yield they get relative to bank yields, et cetera. So just a bit of plateauing for a bit and see how real estate prices come out.
I'll ask a follow-up, and it's interesting for those of you that know VinaCapital well. We have Vina Living, which is a real estate development arm, and so what we're looking at in our real estate group is building let's call it lifestyle communities, but more on the outskirts of the city because there still is significant demand for new housing for the emerging middle class. Back to you, Andy, this may be more headline risk than real risk. A month or so ago, there were headlines about auctions in Tuduk City, which is right across the river, at prices that were crazy, not just by Vietnam standards, but by global standards. Do you have a comment on what you think went on behind the scenes, and is that should people take any information from the headlines, or is that an isolated incident?
Yeah, I think there's two areas to touch upon here. One is the infrastructure build out in Vietnam needs to be mentioned. Because of that, real estate on the outskirts of town, from outside of Hanoi or outside of Ho Chi Minh City, becomes very, very easy to access, and people will purchase it. In Hanoi, we've already launched the first subway system, or the railways on top. Metro. In Ho Chi Minh City, we'll launch that fairly soon. So the infrastructure is leading the way for a lot of the value of the real estate to come up in the outskirts. As for the recent auction in the suburb of Ho Chi Minh City, I think it's a quite unique situation. I don't think it's reflective of what's happening overall in the real estate market in Ho Chi Minh City and Hanoi and around. And the reason I say that is because most real estate assets are still affordable by and large, if land were sold at these auction prices, then the affordability would drop significantly. And when we're talking about people's normal income, average income level, and their ability to borrow from the bank to purchase reasonable homes. Certainly, the prices that were shown in auction would take that affordability out of the whack.
Okay, excellent. Thank you. Because, like you said, everybody here is invested or is interested in investing in real estate in Vietnam. All right. So, one quick question is. Just KV, I'll go to you. The question came in is, how is Vietnam, or how is VOF, excuse me, different from other Vietnam funds? And I say that as representing some of the other Vietnam funds within VinaCapital, but what makes VOF really unique?
Well, we said this over and over again. Our focus, our approach to investing to Vietnam is look for private equity, private assets. And it's been quite interesting. We're going through an extreme period of volatility across the markets. And the quality of the VOF portfolio, investing into companies when they were private, being long-term investors, has meant actually that the volatility of our portfolio, the volatility of our NAV, so to speak, has been quite low. So the difference for us is that we invest in businesses. We partner with sponsors and entrepreneurs to help them grow. We take them through a process, through exit, through an IPO, through a trade sale, where we feel that what value we can add sort of has reached its limit, we will exit. We're not stuck to the screens to see the intraday price movements. I think that's quite a luxury for us. Yeah.
I'd like to add to that. I think I want to make sure that people understand that when we make these investments into the businesses, the uniqueness of VOF is we will do due diligence. We will engage in legal, financial, and ESG due diligence. It's like lifting the hood of the car and checking out with a mechanic before buying the car, rather than buying stocks and, hey, if something's wrong, it's okay, it's listed, we can sell. We don't think that way. We think about investing in a business for the next 3, 5, and 7 years, working with the entrepreneurs and management team to grow that business. If it happens to be sold to a strategic buyer, great. If it's not, we can always take it public. So we even have optionality in terms of which exit route we take.
Yeah, and I'll just add to it, what also makes it unique is you get all of that exposure in a daily liquid portfolio. So we can talk about, if it was dedicated private equity with a 5-year lockup, great, not as unique. Private equity approach, you get public equities and you're not forced to sell, whether you look at Hoa Phat or Hong Kong. But then you have it in a daily listed solution, so there really is unique.
And I think to add to that is, we are the only fund in Vietnam that pays a consistent dividend. Since 2016, we've been able to generate income from the portfolio. We've paid about $100 million US, in every 6 months, to investors. In addition to that, we've spent about $400 million US since 2011 to have an active share buyback program. So, those two elements sort of make us quite unique.
And the other issue with a purely private equity structure, the LPGP structure in Vietnam, is the time that they have to spend with the company is limited to 3 to 5 years. Now, entrepreneurs in Vietnam are coming to us and say, hey, we are now realizing that a lot of the LPGP investors into our businesses have put a lot of pressure on us, the entrepreneur, to find an exit within a 3 to 5 year time frame. And we would tell them, wait a minute, that's such a short time frame in a frontier/emerging market like Vietnam. How can, they're coming to us and say, how can you stay with us, partner with us for 5 to 10 to 15 years? And we said, yes, that's certainly a reasonable request because we've done it with Hoa Phat and P&J, the largest jewelry company, and even Vinamilk.
Yeah, and it is interesting. It gets back to, I think, investors will look at you and say, what can you deliver for me as an investor? Companies are going to look at you and say, I'm going to take your capital because you have the experience of walking companies through the journey and guiding them through the journey. And so there's really, part of what makes VinaCapital different, obviously Andy and KV and the team that works with them is, you've got the longest history of doing PE in Vietnam and actually helping companies reach their goals, which is a much different value. Okay. Michael, a question for you. So, over the last couple of years, we've talked on and off about tourism. How we were, I think, kind of early on saying no tourism, we're not expecting it. Now it looks like the borders are going to reopen in March. What is your view on what that means for GDP? Are we talking Q2 outcome? Or are we talking really Q3, Q4? Or is it really kind of more of a 2023 story?
No, I think there will be a major positive impact on GDP this year. So far, I've been assuming that, as you mentioned, the government is technically going to reopen the border on, I think it's March 15th. I've been assuming that by the time all the kinks are worked out, et cetera, that this is really properly reopen in sort of around the beginning of the second half of next year, this year. So let's say May, June, or something like that. Now, actually, the impact on GDP growth is surprisingly big, because before COVID, foreign tourism used to directly contribute about 8% of GDP. And there was some extra contribution from indirect stuff. Well, actually, when you think about it, when you go, you think, maybe picture a pie in your mind. When you go from 8% of the pie to 0, which is basically what it's been for the last 2 years, and then if you have any sort of rebound at all, arithmetically it actually makes a big boost to GDP growth. So I'm assuming that, as Andy mentioned, we don't have any Chinese tourists come back this year. But even if you have that, and now probably not Russians as well, but even without those two, even if you get half of the year of kind of more or less resumption to normal tourism, the impact on GDP growth could be 2.5, 3 percentage points. So it's one of the reasons that I'm, very optimistic about GDP growth this year. It could easily be 7.5% plus.
Yeah, I'll put you on the spot. So you're 7.5?
Yeah.
7?
Yes,
7.5?
GDP growth.
Yeah.
7.5 plus.
And what is the consensus?
I think consensus, actually, when we've been saying this for a couple months, and at that time people were at 6, and then now they're at, so I think probably almost at 7 now. They've been coming up to our number.
So the consensus used to be 6.5.
Yeah. So.
All right. So Andy, here's a question for you, and this is it may be appropriate, but we'll find out. It came in. Question is about what does the startup pipeline look like in Vietnam today in comparison to where Indonesia or India started their startup culture kind of explosion 3 years ago? So I know we're on the PE side, not really the venture side, but when you think of the startup culture, we talked a bit about technology, and then your background at Dell, I thought it was still a good question. So what is the startup culture here, and how do you think it'll develop?
I've been pleasantly surprised that the startup culture is very, very aggressive in Vietnam.
What do you mean by aggressive
means that the entrepreneurs are willing to step out of their comfort zone.
Yeah.
And take on new ideas, turn those ideas from a PowerPoint presentation into a commercializable product. Now, there are weaknesses in doing that. And when I did venture investment, we actually study how to have successful venture investment. And one of the key elements is to have what we call professional managers. Because as young people, you have great ideas, but you do need professional managers to help turn those ideas into commercializable products, right? So a combination of a lot of entrepreneurs with professional managers, then they tend to work for large corporations like Intel or Microsoft or Google, and they would leave their job and help these startups grow. We certainly don't have that in this environment, but what we do have is an aggressive culture of people finding new ideas and trying to turn it into a commercial product, and we have money. There's plenty of capital coming into this space. So a combination of 2 of the 3 elements is helping, but you can imagine a lot of stumbling is going to happen.
Now, do you have any perspective on where Vietnam is vis-a kind of Indonesia or India?
No, it's difficult to say because India is like 1.2, 1.3 billion people. You can't compare Vietnam to India. And Indonesia is much larger than Vietnam as well. But Indonesia, the infrastructure, the landmass of Indonesia is islands. It's not continuous like Vietnam. So it's a different environment completely. And the economic investment culture of Indonesia tends to lie in a handful of groups. They have a large amount of capital. They can back companies, or they can choose not to develop a certain area, and you may not have a chance. Whereas Vietnam is pretty open, and you have a better sense of success if you can deliver a solution to a problem, rather than trying to find a problem for the solution that you're trying to that you have.
I built this. Let me go find something.
Yes, this is a fundamental problem with a lot of venture entrepreneurs. They come up with a great idea, but then they have to find the problem.
Yeah.
Right. So we have to get away from that. And I think Vietnam is pretty good at that. The younger generation, they learn quickly, they think quickly, and they try to find the problem and find a solution for it.
What I'll add to that, it's not directly on the question, again, relative to Indonesia or India, but I will tell you, one of the things that surprised me is how much, I'll call it government sponsorship there is of the entrepreneurialism here I attended a couple of conferences that were technology, venture capital conferences that the government was sponsoring. There were contests and prizes. And so, people think about Vietnam, is it kind of the next hotbed of fintech or other kind of technology platforms? And the answer is probably.
Yes.
Because it's really where there's so much capital coming to, and not only is it from within Vietnam, we're seeing a lot of regional folks from Singapore and other markets, Hong Kong, coming in with bigger dollars, looking for investments. But I will tell you, the actual startup, the people, the technology, the desire is absolutely there.
Sure.
Okay. All righty. So here we go here. Okay. There was one question. I think we may have covered it, but what is the GDP? What is percent GDP of real estate in Vietnam?
This percentage of GDP. Wow, this is a hard question. I don't have an answer for that.
It's around 10 to 12%.
Okay. How would you measure that?
I'm asking the question.
How would you measure that?
I just take the government's word for it.
Well, real estate can be looked at the value of the asset, the cash flow.
That's including like construction materials and things of that nature.
Okay.
Yeah, all in.
Yeah. All right. So Michael, another question for you. How do you forecast a trade surplus for the year? Will Vietnam be able to reach a high trade balance level, kind of a pre-COVID, or do you think that'll take a couple more years?
The reason that I have a forecast for a trade surplus this year is really kind of a quirk of arithmetic, because last year what happened was firms imported an enormous amount of production materials that they need to produce. Talk about FDI. I mean, something like 75% of Vietnam's imports are from FDI companies and importing production materials, plastic resins, capital goods, things of that nature. Now last year, imports surged about 30% or so, and export growth was also very strong, but there was quite a big gap. It was a bit below 20% export growth. So, and the reason why is because the firms imported all the production material that they need, and they were not able to actually produce the exports because of all the stuff with COVID. And so, just from an arithmetic point of view, well, I expect that to kind of reverse this year, that companies will wind down their all the inventories of all these production materials, and while the export growth is modest. We don't expect very strong export growth to the U.S. this year, simply because people in the U.S. have purchased all the televisions, furniture, stay-at-home goods that they need. That's according to surveys by the university, consumer confidence surveys by the University of Michigan and others. So long story short, this is how I get to a prediction of, let's call it about 4% of GDP trade surplus this year, which is kind of consistent, not last year because of this phenomenon I just mentioned, but 3 to 4% consistent trade surpluses in the years leading up to last year.
Excellent. All right. Andy, got a question for you. Let's see here. You always talk about kind of 3 risks that you keep in your pocket. So what are those risks today, and how do you think about that?
Yeah, I do, and I work closely with Mike to think through some of the risks. And at the moment, I have to admit, I am concerned about the VND, the local currency. We have been enjoying a period of time where the VND has appreciated against the US dollars, and I think Mike is quite bullish that it will continue to remain stable or even appreciate against the US dollars. But I am worried that because the US dollar has strengthened so much and the volatility around the globe may reverse this trend in the short term. And because we report in USD, and it made, if all things remain unchanged, the value of our portfolio goes down. I'm also concerned about inflation, but Mike said, we're maybe look at 3.5%, 4%, but I am concerned about inflation from a perspective of demand, because if all the tourists comes to Vietnam, as Mike has predicted, and the government is spending a lot of money to stimulate the economy, and the domestic consumption story starts to revive, I think we're going to have a bit of inflation to worry about. And inflation, to me, it's okay, but what it leads to is higher interest rates with the bank. And it may creep into the business's bottom line, taking away the cost of funding, increasing the cost of funding for a lot of the businesses, particularly in the real estate space. And in the real estate space, there's a lot of loans and debts that go in the process of project finance. So inflation is what I worry, but it leads to higher level of interest rates.
So it's not really, you're not really worried about inflation, you're worried about what happens if there's inflation.
And the third component, as in any fast-growing economy like Vietnam at 6 to 7% GDP growth. My other concern is talent pool. We're seeing a lot of our businesses. We invest in good companies with good management team. And everyone sees that, and they want to recruit from this management team, and we're concerned that we may not have the right compensation package in place for the long run, aligning the interests of some of these senior executives to stay with us. The entrepreneurs, the founders are there, but we're talking about the CFO, the COO, even the CEO.
The number two, basically.
Yeah, even the CEO, because a lot of the entrepreneurs will become chairmen and sits on board. My concern is that the talent pool will get dilapidated. I mean, not dilapidated, but reduced quite quickly, and it moves around other of FDI companies that come to Vietnam and other Vietnamese businesses that are growing up. And as a result, one of the key things we have to do is constantly think about, okay, what is the succession plan for each of these executives in each of the businesses we look at?
And as we think about Vietnam reopening, we joked I actually went back and visited my family, and to get back into the country was approval from several government agencies. That's going away. You can leave and come back like this. Does that fear go away a little bit?
Yeah, I think so. I mean, I came back from the U.S. a couple weeks ago, just stayed home for 3 days. It's quite easy. And I think, like Mike said, we're going to open up the borders on March 15. I suspect, I'm not clear on that, but I suspect the quarantine period may go away. You just need to prove that you're PCR negative and you're vaccinated, and you're welcome to come to Vietnam. And I hope that will be the case, and certainly it'll drive up tourism. And the other thing is, they'll drive the FDI executives to come back to Vietnam more. And we're spending a lot of FDI money, and the executives need to come and feel and see what's going on before they approve that disbursement.
Terrific.
It's very much just living with COVID theme that we've been talking about since last year. And it's good to see that, the government agencies, whatnot, are aligning with that. We really want to focus on opening up the borders and bringing tourism in. And importantly, FDI, I think last year, commitments actually increased slightly last year. So that money needs to get put to work, and you need to have professional managers to come in to do that.
On the dong, let me just note, because in the firm, I'm the one that's kind of the most optimistic about the value of the dong. Of course, if my boss is worried about it, I'm worried about it. It goes without saying. But what I do notice is that, first of all, I mentioned a couple minutes ago that I expect a big surge in the trade surplus this year. And also, certainly the US dollar, surged after the Russian invasion of Ukraine, but it surged and then kind of came back down fairly quickly. And if you look at the value of the USD VND exchange rate, it actually hasn't really moved this year. The exchange rate has probably appreciated by almost 1% year to date, and so far not much impact. Cross our fingers, we'll see what happens. But I'm still feel fairly confident about the dong.
Yeah, true. So that was all the questions that came in from the audience. Andy, any kind of closing comments?
Yeah, thank you very much for spending a bit of time with us today. I hope we address some of your concerns and have given you enough information about the portfolio and how it's done over the years. We have been very fortunate to have a very strong year for 2021. And I'm hoping that 2022 will be just as strong on the back of economic recovery, as Mike said, and certainly GDP going from 2.6% in 2021 to 6 to 7% is tremendous.
7.5.
7.5. Sorry, 7.5. And not a whole lot of countries around the world can make this sort of claim. And so we hope that businesses can deliver. Right now, the average earnings per share growth is looking to come in around 20 to 25% for 2022 over 2021. I hope that will come true. With valuations around the mid-teen, this certainly represents a good value for investment, at least on the listed side. But then again, we do focus on the private side, and certainly the valuation on the listed side do reflect our negotiation terms with the private side. But we are hoping for a strong 2022. But I think at the end of the day, we do look at Vietnam as a long-term investments. It's not about 1 or 2 years. It's about the 3 to 5 year time frame. And our objective is to deliver sustainable return over the 3 to 5 year time frame, work with these businesses, some for 10 to 15 years, but to work with them in the medium to longer term to grow businesses. And the important things going forward we need to be very conscious about is environmental factors. We are growing as an economy, and we need to be sensitive to pollutions, sensitive to land grab, sensitive to child labor, all that stuff, because we're simply growing very, very fast. And we have taken on a little bit of that responsibility, if you will, to ensure that the businesses that we invest in do adhere to a certain level of international standard when it comes to ESG. So I hope that answers a lot of your questions and concerns about the fund, and hopefully you remain long-term investors in VOF.
All right. Well, everybody that joined us today, thank you very much. If there's a question that comes up afterwards or something that we didn't get to that I missed on the iPad, I apologize. Please send us an email. We look forward to speaking with you next quarter, and please be safe, and we'll speak with you soon.